Hey folks, Len Fletcher here with RE/MAX Moves, and today I'd like to share with you some thoughts and ideas from our preferred lenders about common mistakes that they see buyers making when they're in the process of getting a loan or prior to getting a loan. So hear what they have to say and then learn from the mistakes that they've seen. And I'm sitting today with Bert Karrer, one of our preferred lenders with Fairway Mortgage, and we're going to have a conversation about some of the common mistakes that you see buyers making when they're thinking about buying a home or they're actually in the process of buying a home.
Yeah, I think number one is that they don't have a pre-approval letter and they haven't gone deep with their lender in understanding what they're going to need to provide for their lender. A pre-approval letter is essential, right? We talk about the ready, willing, and able to buy a home. This is the able, unless you're paying cash, of course. One of the big mistakes I think people make is that they assume that they qualify for a certain program because they read about it, but they need to talk to a mortgage professional just so that they can see, does their situation apply? Very important.
So don't make assumptions until you've actually talked with a lender to find out what's really going on.
That's right.
Fair? Okay. Anything else?
We run into this one daily, and it's about people getting online credit scores, right? Algorithms are different for online credit, for automobile credit, for financing furniture, and there is no algorithm that's quite like the mortgage credit scoring algorithm. So in other words, on Credit Karma, for instance, you could have a 710 score, and we've seen it be off as far as the mortgage credit score for up to 60 points.
Really?
Yeah, so a big dip, it's usually on the downside.
Fair enough. So just because you pulled your credit report online doesn't mean that you're qualified to buy a house.
That's right.
All right. All right. Anything else?
Yeah, I think another assumption is that if your student loans are in deferment, that they don't count against you in debt. We run across this one quite a bit. Maybe you might have $10 or $20 or $30,000 in student loans that are deferred, and we have to count 1% of those loans against you monthly, whether you're paying or not.
My son-in-law is in that same situation. He has student loans. He can't get a mortgage.
That's right. I think another misconception out there that we deal with quite a bit are the self-employed buyers believing that what they actually make can be conveyed to the mortgage versus what they show they make on their tax returns, right? For example, you could make $50,000 a year in a self-employed environment, but you only show $10,000 on your tax returns because of write-offs or whatever. Well, in the mortgage world, we can only use what you report to Uncle Sam.
Ah.
So we have to take tax returns and we have to use that as your income and 2 years of it.
Great. So some good insight there for you. And it sounds like if you're thinking about buying a home, your first step should be talk with a mortgage broker.
Call Bert.
Yeah. Call Bert. There you go. All right. Thanks, Bert. Till next time, guys, have a great day. Well, I hope you found this information useful and beneficial for you, and you learned a few things, and you won't make the same mistakes that some of these other folks have.